Welcome back, investors, to Take Your Time News. I'm Adam, and today the stock market might have been feeling a bit shy after that wild start to the year that we've had so far. Investors were taking a closer look at earnings reports because we are smack dab at the beginning of the earnings season, and we had some more big banks reports which revealed some mixed results, and we also may have had a bit of a cooling off of excitement due to the Q4 earnings season kicking off and some of the earnings we got today. For example, Goldman Sachs, ticker symbol GS, was down 6.4% today and took a hit after reporting earnings and revenue that were no good, and they were also below expectations, and they had an increase in provisions for credit losses. More delinquencies on the books look like they're coming up. And we also heard that last week from a couple of the big banks. And then we had Morgan Stanley, ticker symbol MS, up 5.8% today. Morgan Stanley, they were able to pull the rabbit out of the hat, and they received a pat on the back for it after its quarterly results, even though they did miss the mark on Q4 earnings. And then the Dow Jones. The Dow Jones had a good day thanks to Goldman Sachs, but the NASDAQ and the S&P 500, they had a decent day, not huge losses, but they were up 0.6% for the NASDAQ and 0.4% for the S&P 500 earlier in the morning. Now, at the start of today, the S&P 500 was trading above the 4,000 level, and there was a strong desire to buy. Many thought we could break this resistance. We have got it from here, but it didn't hold. Advancers were leading decliners at a ratio of about 2-to-1, and that was at the New York Stock Exchange. And then at the NASDAQ, I believe it was a 3-to-2-ish at the NASDAQ, with advancers leading decliners. But the good old vibes, they didn't last long, as we all know, with the S&P down 0.2%, the Q's up 0.2%, the IWM down 0.1%, mid caps down 0.1%. It was really a flat day, except for the Dow. The Dow was down 1.1% on the day, and that had a lot to do with the big banks reporting that are a part of the Dow. So everything was flat. Dow was down pretty big. But what does this mean, right? What does this mean? With the S&P 500 breaking above that 4,000 level this morning, that 4,000 level became a roadblock this afternoon. Now, some of the mega cap stocks in the stock market had a pretty good day, which helped to keep the broader market afloat. Apple was one of them, up 0.9%. And Tesla, big day for Tesla, 7.4% to the upside. They were especially impressive, and they helped to push the information technology sector up 0.4%, and consumer discretionary up 0.1% to the top of the leaderboard. Although materials were down 1.1% and communication services were down 0.9%, and they were the ones that, they showed the worst losses of the day out of the 11 S&P 500 sectors. Now, we do have some Fed speak coming up tomorrow. Let me throw this up. Let me get my cursor right here. Here's the calendar for tomorrow, right? We got retail sales coming out, producer price index, the PPI. Those two economic data releases come out. And then we've got Fed speak. St. Louis Fed president talks tomorrow, and the Philadelphia Fed president talks tomorrow, and the Dallas Fed president talks tomorrow. So far this year in 2023, every Fed speaker thus far has been negative, and it has had a negative impact on the markets, except for one, Jerome Powell. Jerome Powell, in his speech so far in 2023, the markets completely ignored what he said because it was pretty trivial. There wasn't a whole lot to be gathered or gleaned from Jerome Powell's speech. So again, I'll be curious to see what type of, headliners or hot shots these Fed presidents can give us tomorrow to maybe upset the apple cart in the market. Retail sales, obviously a big one, expecting 1% decline. It was a 0.6% decline. Last time it came out. The producer price index is looking to be negative 0.1%. We'll see how that holds up. Okay. So that's what's happening tomorrow in the market. All right, let's get over here. Adam, does the Dow get easily dragged down by one stock? See, the Dow holds 30 stocks. That's it. 30 stocks in the Dow, and that's it. When you compare that to the S&P 500, the S&P 500 has 500 stocks. So, yes, if a component in the Dow causes, or I should say, let me back up. If a component in the Dow drops 10%, that can pull the Dow Jones in a big way, okay? So with Goldman Sachs today dropping 6.4%, that's pretty heavy. Let me pull Goldman Sachs up right quick. This is the Dow on the chart. Let me point this out before I go to Goldman Sachs, and the ticker is GS for Goldman Sachs. The Dow has been on a really nice run, really nice, relative to the SPY, relative to the Qs, relative to the IWM. The Dow has been outperforming relative to those other indices, and it's been a strong outperformance. I mean, the Dow basically had a double bottom the end of September and then the middle of October that has just sent it up and pretty darn high. One thing to point out about the Dow, let me get my highlighter here. First, let me pull this down a little bit. That the other indices have yet to be able to do is the previous high set in the middle of August. The Dow was able to break that and make a new high. See, all the other indices, SPY, Q, IWM, MDY, they're all making lower highs and lower lows. Now, if those other indices can break the resistance they're at right now, then it's potentially possible for them to set a new high, but they haven't done it yet. The Dow is the one who has done that so far, which is positive. Now, if we try to take that in connection, the double low, the double bottom that was down here into September, mid October, if we go to the low before that, it was back here, okay? Back in June, the middle of June, before the big rally. Can we say that now we got a higher low right here, higher high, higher low? I don't think we can yet. I don't think we can yet. I don't think there's enough evidence there that says, hey, the Dow is going to just keep, being a rocket ship and pushing itself higher. What we have seen so far with earnings is a mixed bag. Like today, for example, Goldman Sachs didn't do so good, right? But Morgan Stanley did. So it doesn't take much for this market to feel confused and feel like, oh, well, maybe valuations are still too high compared to earnings that companies are bringing in, okay? So I want to point that out. I also want to point this out too on the Dow. The Dow is at the top of its range, okay? Let me get my highlighter back. So this is similar. The blue lines that are on here that go like so, they're also down here. They're very similar to Bollinger Bands, but they're not Bollinger Bands, okay? And what this is showing you is that the Dow is at the top of its range, right? There, just like on Bollinger Bands, there's a midline also, and the Dow's at the top of that. Now, it doesn't mean that the Dow has to fall straight down because it is above that midline, but it is rather high. And when it breaks out of said top bar, like it did right here, it usually will pull right back in, kind of similar to how the 5-period moving average works and how the candlesticks need to stay connected with that moving average. So the Dow's got a couple of things going for it here that says, hold up, we could be at the finish line for now for the bulls. And this is our, kind of first sign that, hey, things are going to start breaking down. One other thing I want to point out before I pull up Goldman Sachs is where the Dow landed today. All right, so it's close to the top of its range. And if you look, the wick of its candle, what was its low today? 338. The lower end of the weekly expected move is 338 for the Dow. So on day one, even though this is a shortened trading week, we only have 4. Now we are left to 3 trading days. On day one of the shortened week, the Dow has tagged its lower weekly expected move. Now, it didn't close there. It closed $1 higher, which was positive, all right? But it, at least so you know, did tag that area on day one. All right, let me real quick go to Goldman Sachs, which is GS as the ticker. And you can see big drop today for Goldman Sachs. Banks have been doing pretty good. An example right here, it popped. Oops, I don't have my highlighter. Let me get my highlighter back. Great example right here. It popped out of the top of its zone. And typically when stocks do that, it pulls right back down. Now, Bollinger Bands, they're a little bit different. You don't really get these signals where candles can pop out of the zone as frequently as these zones do, but you can nonetheless get it on the Bollinger Bands. It's just not as frequent, which is why I like these zones, because they are pretty darn precise on what's going to happen. All right, so big drop. Goldman Sachs down 6.5% on the day. Pretty dreadful. Consumer credit is higher. They are taking into account bigger losses. They missed on earnings and revenue, so it just wasn't good for the bank there. And then to bring this to the Dow, look at the market cap, bottom right corner here. Okay, I'll bring it down to the stats here. We've got a market cap of $126.6 billion. That's a big market cap. And if you're one of only 30 stocks in the Dow Jones Industrial Average, when you drop 6.5% in a single day, it is going to have an oversized chunk of the Dow following it, okay? And then if you have numerous Dow components on top of it that are also pulling in the red, then it can be even worse, all right? So yes, it can. Okay, whoa, I'm missing a bunch here. Let's get caught up. Tesla, sure. Let's go to Tesla, TSLA. Oh, why do I do that? I always do that. TSLA is the ticker for Tesla. 3 scalps today for 231. Awesome. 5-day EMA was helpful. That is tremendous. I am so happy and proud to hear that. Great job. Awesome. All right, let's pull up old Tesla. And let's look at a couple of things here on Tesla. Number one, day one for Tesla, and it tags the upper end of its weekly expected move, okay? 131, $131 a share was the upper end of the weekly expected move for Tesla. It closed at 131. So right there at the upper end of the weekly expected move. Typically, when that occurs, not every time, but typically that means you could see the stock just kind of doodling around this weekly expected move until we get to the close of the week, which is Friday in the day. Okay, that's typical. There are small probabilities of a 2 sigma move. And a 2 sigma move basically just says that, you know, day one or whatever from the close of business last Friday, which opened up this morning nicely, to the weekly expected move, that's a 1 sigma move. If you take that and double it, well, then you got yourself a 2 sigma move. Now, everything that occurs within a 1 sigma move right here is your weekly expected move range. So for Tesla, the top of it is 131. The lower end of the weekly expected move is 113. Anything that happens within there is a 68% probability, you can call it a win rate if you want to, probability that the equity, the stock, whatever you're using this for, will close within those two numbers by the close of business on Friday 68% of the time. Now, if you have a 2 sigma move, then 98% of the time, price action will close within that 2 sigma move. But it's not typical to see that big of a move. But that captures 98% of all price action within that 1 week window. And then these numbers update for the coming week. Okay. So we got that. Tesla tagged it. It could just doodle around there for the rest of this week. It could pull back. It could break out a little bit. You know, another probability is that Tesla breaks out of this. And if it does, then depending on other conditions, like its RSI, its MACD, its volume, how price action is moving within the day, you could see it pull back to that 131 and below by the end of business on Friday. Because a lot of times when stocks break out, they come back down to finish the week within the 2 price ranges, okay? Same thing works on the bottom. If it breaks down, then sometimes that's a great opportunity to go long because it'll come back into. You guys have heard me say this a bazillion times. That's how it typically works around these moving averages. And that's why it's important to know. Now, if I pull up Tesla and do the quick calculation here, I'll tell you what tomorrow's individual expected move is for the day. I just got to log back in here. Give me a quick second. All right, let's go to TSLA. All right, so the daily expected move for Tesla is about $7, and is at $7.48. So tomorrow, and that's plus or minus. So it can either move up by that much or it can pull back by that much. So that is a probability for Tesla tomorrow. So it could have a very a little bit of a smaller move being priced in for Tesla tomorrow than what was made today, which makes sense because Tesla had such a big move today. But again, when you look at where Tesla came from, it's not hard to see that it can have some pretty nice days. One other thing to point out is the lower zone here. I'm drawing a line to show you this zone right here. It goes like that. Now, this is the bottom end of the zone. This is the top end right here of the zone. Now, what I'm showing you is that here, Tesla came outside on the bottom end of that zone. And knowing that this is a daily view, so each candle is one day, knowing that, you know that the further it gets outside of that zone, like if we look at this day right here, it being that far away from the bottom of the zone, you know that one of two things is going to happen. Either Tesla is going to shoot back up to get back inside that zone, or Tesla is going to start moving sideways to get back into that zone. And if we look, this big candle, big red candle, Tesla was down 11.4% that day. The next day wasn't a huge move, but it was a green day. It was the following day where Tesla had an 8% move. And then followed that up with a 1% move, at least to tag the lower end of that zone. And it stayed outside of it. Again, this was the last time right here that it was outside of the zone. And whenever they get, it's like the 5-period moving average with these zones. The further they get away, the higher your risk reward chances of a positive move to the upside. And that's what we saw right here with Tesla. It's a good example of these zones. And when they're not being respected, when price action is not inside of them, then heads up, you know, this thing could be popping back to get in it. Or on the flip side, if it was out making big moves up, then it would be looking to pull back in and get within that zone. So it's a good way to judge risk, just like the 5-period moving average, so you know you're making the right calls. Now, I have custom math, custom equation to come up with the zones that are printed on the screen here. So that's why I say they are not Bollinger Bands, but they are similar to Bollinger Bands. It's just the math is a little different. The math is calculated differently, which gives you these great opportunities right here to say, hey, Tesla has gotten way out of its zone on the lower end. This thing needs to, you know, pop back in. These are our daily risk zones. We've been working on them for a while to kind of get the math right on these. We occasionally send them out to our private investor community. As a matter of fact, if I give me a quick second over here, I want to open it up right quick. Where am I? All right. So we've turned, I'll just show it on screen here real quick, and then I'll take it back. But this is the, as an example, get it over here. This is the daily risk zone, and it's basically using, and this was for today, right? This was for today. And it's using, again, the math that we have. This isn't what I wanted. Beautiful car, isn't it? That's not what I wanted to do. Okay, come on. Come on. Okay. Anyways, the math there, that was funny. The math there is the lower end of the band, the upper end of the band, where price actually is, and it's calculating how far away it is from, maybe the upside, or how far it is from the downside. And then it's put over here on the right-hand side, and then it's also color-coded. When things get red like this, I mean, there's a lot of red on this, a couple spots of green. This means that things are all the way over on the high end of their zone. So that means they're up here. Like technology, for example, XLK. I know I'm kind of missing your thoughts and questions there for a moment, but I want to bring this up because it's important. Technology, which is the XLK ticker symbol, when it loads here, look at how technology is getting really close to the upper end of that zone, right? While Tesla, it had broken down on the lower side, and it's moving up now to the center. Well, technology is getting really close to the top side, and when it does that, well, we can expect it to kind of cool off. So if we look for XLK, just to give you an example, right here, I don't have it highlighted red just to show you what the numbers are. So on Friday, it closed at 130. The upper end that it could potentially sit at is 131. The lower end that it could potentially sit at on the zone is 121. And it had a risk reward of probability of a 1% to the upside, negative 7% probability for a downside move. And it's ranked over here 0 to 100. Sometimes the number goes above 100, but when it is in the 90s, then that box will be red there, that did it in real time for you to say that, hey, XLK is getting extended to its upside based on that math. Okay. And then, what we've noticed is that when we have, a lot of red on the screen like this, we'll have a nice pullback. And then that pullback will lead to then the red on the screen disappearing, turning to either lighter shades of red, or turning to grays, or all the way back to white if it's in its 50s. And then when it starts, getting to the lower end of that zone, things start lighting up green. Like we had the VIX down here on the low side. We had the dollar down here on the low side, looking for those two to potentially have a probability of going up. So it's interesting. It's fun to use. It helps you manage your risk. Helps you to manage your risk, know when it's time to get in or time to get out. It helps you manage your risk just like the 5-day EMA helps to manage your risk. So those things are cool. They're fun. They help you to become a better trader. So we have that for a private investor community. Just seeing Tesla as an example, I just had to go on that little spiel there to talk about it. But we'll move on. Yeah, nice one. Good move for your scalps on Tesla. You're welcome. Oh, that's great. Being up that much on Tesla this year. That is wonderful. Yep, absolutely. Oh, I love seeing you guys talking back and forth. This is great. Okay. I didn't mention it at the beginning, but I should have. The live stream is for you. So if you have questions, plug them into the live chat. We'll go over them. I don't have too much that I want to talk about today. It's a short week, but I do want to talk about a few of these stocks here that are getting closer to the upper side, and I want to go through the main indices. So let's do that right quick. For the SPX, which is the ticker for the S&P 500, it is at the top, okay? It is at the top of this trend line, this 2022 downsloping trend line that has stopped every single major rally in 2022, and it looks like it's going to stop this 2023 rally, okay? If bulls cannot keep this market above 4,000, and close above 4,000, I don't see how we can go higher. Now, one thing I need to point out for the S&P 500, I sent this to our private investor community yesterday as like a thought process. There is, and let me go ahead and hide those ranges there. There is an inverse head and shoulders pattern on the S&P 500. This is it. I've got the left shoulder over here, okay? I've got the head right here, and there's the right shoulder. An inverse head and shoulder is typically viewed as a reversal pattern. So if this is true, and if this inverse head and shoulders gets validated, and it is a reversal pattern, because remember, patterns can fail. Not all patterns get validated. Some patterns fail. The setup is there, but then the pattern fails. It breaks down, something happens, it doesn't go its way. All right? That's one thing to know about technical analysis. When you're looking at, your stock chart, and, maybe you're glancing over at chart patterns to try to figure out, okay, where's this thing going? What's this move? If we look here in the middle, and let me just get our highlighter here. This is the inverse head and shoulders right here. And as you can see, you have your downtrend, you have your left shoulder, you build out your head, you build out your right shoulder, and then typically you have a breakout to the upside. And that breakout, how you measure your target of, how high do we think it's going to go, is you go from the neckline and you measure all the way to the tip of the head. And that right there is what you measure from the neckline then up, right? And that right there is your target for where this head and shoulders pattern could take you. So an inverse head and shoulders pattern is typically seen as bullish as long as it can be validated. And validated just means that it follows the pattern and the path that it has in the past, right? An inverse head and shoulder, left shoulder, head, right shoulder breakout, okay? As long as it breaks out, you then can validate that chart pattern, all right? So we're waiting for that validation or breakdown to occur right now. That's it. That's all we're doing with the S&P 500. And earnings will be and are the key to whether we get the breakout or we get the breakdown, whether this chart pattern is validated or it's not. okay? Earnings are the key. I don't have the key. I don't think you have the key. Earnings have the key. All right? So I just want to point that out. It is there. It's staring us in the face, right? And if you want to try to measure the neckline, well, I would probably say, real quick, let me just kind of put it on here so everyone knows. I would probably take a shot at saying the neckline is right below this line here. I can't draw very good with my highlighter, but right through there. So if we try to measure this and say, all right, you know, what could we potentially be looking at? Well, oops, I don't know why the. Okay, there we go. You know, what kind of move are we looking at? I think it could be a 6 to 8% move, right? Just all depending on where you precisely place that neckline on this pattern, okay? All right, cool. I wanted to point that out so everyone knows that us sitting here at this resistance point, like we're waiting for something. That's what we're waiting for. Either the market is so that pendulum is either swinging from being overly bearish, like we talked about on Friday, being overly bearish to now that pendulum is swinging to the other side where we're going to get overly bullish, right? And a great trader is neither overly bearish or overly bullish. A good trader is a realist who buys from the pessimist and sells to the optimist, right? Okay. All right, let's get in here. All right, TSM, I would be happy to look at TSM, and then I'll come back to the SPY. TSM as the good old ticker. All right, now I'm gonna put the zones over here just so they are visible so you can see this, because this was a big move. Taiwan Semi had a nice earnings report, okay? EPS beat of 4.3%. Revenue was pretty spot on. 0.1% miss, that's hardly anything. You know, that's pretty flat. But they had some good news about their guidance. Let's see if TradingView has any good headlines. Nope. Applied Materials is another one that I think is really good. It's got NVIDIA on here, soft landing for chips, large cap stocks to add to your buy. Okay, so nothing really there about specifically in the headline. So if we look here, there's a couple things I want to point out. Number one is the 5-day EMA, okay? You can see here that this thing's been disconnected now for a while. In the short term, you see the 5-day moving average pointing up. That's bullish, okay? The 200-day moving average, it's above. Its 20-day and 50-day moving averages, it's above. When it comes to the 50-day, it's bullish above, bearish below, as just an old saying for when you get to the 50-day moving average. 50-day simple moving average. This, to me here, has gotten overextended. I mean, this was a 2.5% move today. There was a bit of candle wick up top, but no candle wick on the bottom. The RSI is at a 78.8. This is overextended to the upside. 70 and above is technically oversold. The 5-day moving average is disconnected from the candles. All right. It's actually been disconnected going all the way back to January the 6th right here. So we've got 1, 2, 3 days almost reconnected there. And then earnings gave it a big boost. 4, 5. It's been disconnected now for 6 days. Now, on average, 2 to 3 days is it being disconnected from that 5-period moving average. So that's another sign to me, a bigger sign like the RSI that says, hey, this is oversold. Okay. I'm looking for what the expected move is tomorrow. So I'm just doing the quick math here on it. And we've got about a $2.34 move. So I'm just going to put this here. Now it's plus or minus $2.50. I'm sorry, $2.34 move. So the options market is pricing in tomorrow for this expected move right here for Taiwan Semi. So we can go and say, okay, if we're going for that, we closed up here. Let's just get it down to 88. If we drop $2, that's taking us down to $86, which is about right there. So a 3.29% move, possibly to the downside or even to the upside, because when the options market is giving you this information and it's pricing in, it's plus or minus, and X amount dollar move is what the expectation is. Well, that could mean it could go up further or go down. I suspect this is going to cool off, especially with wick on the top of the candle, not on the, bottom side of the candle. All right, so we got those lining up. Now, if we, clean up the chart here a little bit and go in and look at how price action has been working on the 15-minute time frame. Let me just clean this off one more. Oh, let me show you one more thing before I dive into the 15-minute. If you look at the zones here, okay, it's outside of the upper zone right here. It's right about running parallel with the 5-period moving average almost. And then the lower end of the zone is down here. That's a big, big, big swing. So that's saying to me, hey, when you take big swings like that, what happens? Well, look right here. We have this, and then we have this big swing up, right? We are disconnected from like everything from that move. What happens next? Well, it moves sideways so it can get back into its zone, and so it can reconnect with its 5-day EMA. So one of two things will happen for Taiwan Semi. Either it, moves sideways so it can reconnect, or it's going to come down. That would be my expectation here, where the highest probability lies. Okay. All right, let's go to the 15-minute time frame here and look at this thing, how it's been acting. We've got 3 trading sessions on the screen. Let's see. Let's get a 4th one on the screen. All right, so there's 4 trading sessions, which includes this gap up right here. This gap up right here on earnings for Taiwan Semi. And then it moved up into about the middle of the day before dropping off. And then it had a gap down, a slow march higher before an explosive move. And now it's kind of rounding the top here. All right. So this could be the it. This could be all the juice that it has, even though we have a big candle here at the end of the day of volume. If we compare that big candle here, what is it, 160,000, and the average is 33,000. So a big move at the end of the day, and it's a green candle, but not much of one. All right. So Taiwan Semi has had a really nice run here. If we want to see one more kind of, all right, where's this thing? Where did it come from? Where could it be going? If this is a weekly look, so each candle represents 1 week. So you can see pretty significantly that this week it has broken above that 50-day moving average right here. That's important. And it has broken above its 200-day moving average on the weekly time frame, right? So, another old saying is nothing good happens below the 200-day moving average. So it's now back above it. Back above the 50. Those are 2 longer term trends that it has beaten. That is positive. But it is coming into prior area of resistance right here, which could just, turn into resistance for it. If it wants to run all the way up and, maybe attempt to set a new, local high, at least breaking, this high that was set here, you have to get up to $92 a share. It's at 88.99. So $82 a share seems like it would be a pretty significant resistance point for Taiwan Semi. So the totality of everything that I just talked about says to me that, hey, Taiwan Semi went on a really good run. It is showing signs of letting off the gas a little bit, that there could be a little bit more left in the tank, getting up to that $92 a share. And then maybe at that point it cools off, it pulls back. I mean, if you look here, 1, 2, 3, this is its 4th week in a row of being green. Its run before that was 1, 2, 3, 4, 5, 6 sessions in a row of being green. 4 of the 6 were basically flat days. 2 of them were big pushers. So it could get up to that 92. And then maybe it just kind of cools off a little bit from there. It'd be nice to see that if it does cool off, that it uses that 50-day moving average or 50-week here in this case as support. That would be very bullish to see for Taiwan Semi. So that's my thoughts there on the technicals here for Taiwan Semi. On the weekly time frame, the RSI is at a 60, so it's 10 points off. MACD is getting up to the 0 line. If it could push through that, that would be positive as well. So Taiwan Semi does have some positives here on the chart. However, it does have some signs of, wait a minute, we're getting a little too frothy here. Let's just take a break for a moment. That's a possibility to them seeing. What do you think? Do you think Netflix moves the market? Netflix has earnings this week, and Netflix could be a real interesting. NFLX. You already know. I'm sure you saw the note go out, but Netflix, it's still in our top 10 momentum stocks this week, even though it looks like it's curling over here at the top to potentially cool its jets from such a powerful move that Netflix has been on. However, it is reconnected with its 5-day EMA. That's positive. It is back within its zone, even though it's at the upper end of its zone. It is still inside of it, so that is a plus there. It is coming down from being oversold. I mean, it's right on that oversold line now at a 70.9 on the RSI. So it's right there at it. We're 2 days away from earnings. And if we check what earnings say here, we're looking for 54 cents of EPS and $7.85 billion. With it being cold weather, there being some snowstorms and so forth, I think the odds of Netflix having a decent earnings are at least in the probabilities of 60 to 65% for Netflix, just because of the time of year. I know Netflix is trying to do some things behind the scenes, and it's been a real strong stock. But I think, again, it looks like it's curling over here at the top on the daily view, and that could be very easily seen as, well, it gave us a good run. We got some nice gains in because of that. But at the same time, the weekly expected moves for where Netflix is, I mean, look at the two purple lines here. It's still, day one down 2%, so it's a little closer to that bottom line. But Netflix has got huge potential for a major swing due to earnings. And if Netflix lines up the stars just right with its earnings and they're perceived as excellent, Netflix has got to do some cooling off within the next couple of days. So it's got some room to shoot up if those earnings, again, line up with the stars and they're perceived as great from the investor community out there. So we'll see. I think it's getting frothy. I think this is, it's rough for Netflix here. But one thing to point out as I bring this in a little bit tighter, I want to take the zones off there real quick. Just look at where Netflix has come from. And if I just do the, Fibonacci here, from the top down to the bottom, 50% retracement is up at $431 a share. So it's $110, $105 or so, $105 or so difference there between where it is now and 50% retracement. If Netflix does have some room in the tank and it can at least get back up to this point right here to test maybe the 350, 355 area, maybe it's got a chance if earnings were perceived as great and it could break 350, 355 and then find support there. That would be the bullish case for Netflix. The bearish case for Netflix is, it's almost retraced back up to the 38.2% line, which would be 368. So it's about $40 and so away from that. So it came close, but not quite. It's overextended. And if earnings are just then, Netflix is going to head down, maybe as low as its 200-day. That's a possibility. Which where's that 200-day sitting at? That 200-day right now is sitting at 245, which would be a pretty significant fall. But if we're looking for a place where Netflix could find some support at, the very first place would be the pullback and launch right here, which is right about, let's call it 275. And then the real place to watch would be right here. That resistance right there could very easily turn into support, and that's at 240. But again, those are big drops, and that's right around that 200-day moving average. So those are big drops for Netflix, but that would kind of be the bearish perspective. And if earnings were bad, if they were losing subscribers, those are kind of like the bullish case, the bearish case for where Netflix could be headed. Netflix looks bearish, pretty much a double top and a back test of a broken rising wedge. Yeah, that's a good call as well. If it broke the tip of this rising wedge right here, and then immediately pulled back from that and is now rounding, kind of rounding the top there. So I definitely get the bear case for Netflix here. And your opinion is awesome and always welcome. All of you guys and gals, if you have an opinion on a stock, even if it's the complete opposite of what I think, that is perfect. Those are the best ideas when we talk about differences and come up with something that maybe works better. So always feel free to share your ideas. This live stream, seriously, it's for you. You are absolutely welcome. Absolutely. Okay. we've been going for an hour. I have gone through my notes, except I do want to look at the SPY and the Qs right quick. So if you do have a question, now is a great time to plug it in. I want to tell you where the weekly expected moves are and its location. And with the SPY, as we start off here with the SPY, it's in a relatively same place as the SPX because they both are marking off, where the market is here. The expected move for the SPY tomorrow is plus or minus $3.46. All right. The zones here, the upper end of the zone is about 402. The upper end of the weekly expected move is 405. I don't know that we got enough here to break through this downsloping trend line. I mean, it's really, really tough to get the momentum to break through it. Now, on the lower side, the lower end of the weekly expected move is 391. The lower end of the zone is down by 377. So it's at the upper end of its zone. It's not outside of the zone, but since it is at the upper end, that's showing me that, hey, wait a minute, it's getting kind of frothy up here. Maybe we need to be patient and wait and see how things progress with this downsloping trend line. Okay? That would be the key there. And who's got the key? Earnings have the key. If you look at today on the SPY and you look at the volume, look at the volume for the SPY today. Let me move it over a little bit so I can see the numbers. Volume is down here towards the bottom of the screen, okay? Volume today, this is a short week, so it's Tuesday. 62 million trades took place. The average is 77. So under average there when it comes to volume. That's not what you want to see for big momentum moves to push you above a big resistance trend line. Okay. If you look back here on this day, December the 13th, when we tried to move through that downsloping trend line, go down and look at the volume down here. I mean, volume was skyrocketing down here. Okay. And then there was a big sell-off, but volume was 123 million when we pushed through that trend line last time. So there's no way volume down here is going to push through. Okay. There's no way. You're going to need a lot more volume for that. All right. Okay. I see another one there for Deer. All right. Let's see what Deer is doing. I'll put Qs up here right quick because Qs are in an interesting place here. We've got this rising wedge. The Qs are not near its downsloping trend line. It's getting near the upper end of its zone. It's not at the very top yet, but it is getting pretty close to the top. The upper end of the weekly expected move for the Qs is 286. The lower end of the weekly expected move is 274. Okay. So we'll see how the Qs maneuver here, but volume is also down it's low and light. All right, so I'll go ahead and wrap up the live stream for tonight. I greatly appreciate each and every one of you joining me. I love the questions. I love that you guys are engaging with each other in the chat. It is so fun to see. Oh, Deer, I totally forgot. Let me pull up Deer right quick. DE. I like Deer as a long-term play. Obviously, it's been on a big run. Caterpillar, ticker cat, has also been on a big run. I'd like to see it follow the path of that highlighter, which it did for a little while, but it has kind of bounced back up, if you will. But it's at a resistance point. That 440 to 450, that's a tough zone for it to attempt to break through. And if I bring the chart a little closer together on the daily time frame here, you can see that point was resistance before. The last time Deer tried to get up that high, so it just couldn't quite make it there. Okay. I see. Wait. So I see you there with your question. Let's get that one in here as well. Okay. Let's see. What do you think of a strangle? Would you rather do it on the SPY or the Q? Premiums are so cheap with the VIX down so much. I think I would prefer to do it on the Qs than the SPY. The SPYs are just too close to the downsloping trend line, and the Qs are not there yet. And if anything has the potential to move more, I think it's the Qs over the SPYs. Look at how much technology has gotten beaten up. All the big mega cap names. Look at how they've been beaten up recently, right? At the end of 2022. So that's where I would rather do that, use that strategy, I should say, on the QQQ. All right. Hate to run so quickly, but I do got a boogie here tonight. Thank you for your questions. I greatly, greatly appreciate them. I'll be back here tomorrow after the market has closed to talk about what happened, why it happened, which is very important, and what to expect going forward. Remember, tomorrow we've got more earnings coming out. And let me just throw this up on the screen. Earnings whispers. Well, first, tomorrow, retail sales, producer price index. Those are some big names. And we got a lot of Fed speak. Okay. Fed speak is never that great. And then earnings whispers here and their most anticipated earnings coming up. We've got a bunch coming out tomorrow. Morgan Stanley, United, a whole bunch of them here that do have the potential to move the market. And you can see more banks this whole week, this shortened week. A lot of banks to come out with earnings. And they do have the potential to move the market. So with that said, thank you all, ladies and gentlemen, so very much for joining me. You are absolutely welcome. You're absolutely welcome. Good luck until tomorrow. Absolutely. Greatly appreciate insights. Have a great night. You do the same. I will see all of you back here tomorrow after the market has closed between 7:30 and 8 p.m. Thank you very much, and I'll see you in the next video.